Have you ever thought about investing in an oil and gas deal for the tax benefits or maybe it just sounds cool? Hi, my name is Lane Kawaoka. I've been investing in real estate since 2009 and surpassed over $2.1 billion of assets, many of which we've partnered with folks like yourself. We've covered real estate, private equity and businesses, and a lot of other alternative investments. I've personally even invested in oil and gas myself. But why we haven't really gone into this asset class more heavily is that there is a really dark side of investing in oil and gas investments that I think it's good to be aware. Not saying that any of this is a disqualifier.
Disqualified.
Something to be aware of before you go into these types of deals and what many of the promoters out there won't tell you. Now, investing in oil and gas working interests requires a sophisticated understanding of the industry. It's not just drilling a hole and guessing where it's at, having a cool geologist who's like a czar. That was at least how it was sold to me when I went out there and kicked it around.
Have you ever had breakfast with a geologist, Dan? It's pretty great.
Now, unlike traditional investments, this asset class involves extensive tactical knowledge around drilling, geological assessments, and market conditions. For example, drilling success depends on the precise execution of complex operations and geological surveys. Like they pull up these maps of all these old deposits in the area, and based off of other past history that they've had on other projects, you're trying to find a needle in a haystack. And you can't just frack and blow stuff up down there to get the oil. It's easy for investors to misjudge a potential project or an area. The classic thing is, oh, we've drilled here before, we've always hit oil, 12 out of 12 or whatever they say.
Trust me.
That said, many of these wells are drilled in unconventional locations, which are called shale plays, which require special techniques, horizontal drilling, and the fracking. That's the F word that comes under a lot of environmental scrutiny. And also, we're not going to get into that too much, but certain states have a lot more stringent rigid regulations that are going to make it a lot more costly. As an investor, a lot of that may be too much detail. I think some people will say, well, I'm aligned interests with my operator, my promoter. But we move into the second big thing here, right? The questionable promoter practices. So what's a promoter? Promoter is like a syndicator, maybe not necessarily the operator, the contractor drilling and putting it together. Now, the oil and gas industry has seen their share of unethical characters out there. And I always use the word a cowboy, right? Since a lot of this is done in Wyoming, Texas, and Oklahoma, where through a lot of these so-called turnkey deals, promoters mark up these drilling costs quite significantly, maybe up 400%. Now, I've seen a case where a promoter raised over $1.62 million for 2 wells, and they charge $125,000 per investor while keeping nearly 60% of the funds as profit or reserves to later take as profit.
Man, that's shady.
These wells are obviously overpriced, and when you combo it with poor management and not hitting oil, investors may end up with less than a third of their investment value. This is a lot worse than your traditional investments, where a lot of times maybe 5 to 15, 20% of your dollar is going to these types of fees. I think in syndicated deals and multifamily, you may see a expense ratio of 5 to 10% there, which is not uncommon. But here you got maybe 3, 4, 5 times as much in this industry. And such markup practices hurt overall returns, obviously, and may even lead to IRS disallowances of the deductions because a lot of the money isn't going to the drilling, and therefore that's where the IDC drilling costs are going to, where you're going to get the tax benefits. If a lot of it's going to the promote or to fees to the operator, you're not getting that money to come back to you as the tax benefits. Now, let's talk a little bit about due diligence here. Working interests need to be conducted. Obviously, I think in this industry, you have to be wary of avoiding fraud and ensuring realistic profit expectations. Essential questions that may come to mind: the promoter's experience, historical success rates, and transparency in the fund allocation. As we mentioned earlier, how much is it going to the markup? One thing you might want to ask is, do they have an engineering team in-house, or the geologists past experience? To me, the geologists, if you're into wine and things like that, the winemaker takes the grapes from the field that the winery has. Some people will say that the winemaker is like the geologist here, right? The geologist is that guy who puts the holes in the right right location and the right depth to find the oil. And sometimes they may choose not to hire a geologist on salary and give them skin in the game. So it's just a consultant. So what the heck do they care about hitting oil? It's always cool to see some type of skin in the game or carried interest in that type of key role there. Now, one thing when you're looking at these types of projections is volatility dependence on what the price of oil is. Now, I think this is maybe around 2020 where a lot of people were getting into NFTs and crypto. I think this is happening again. Funny how it happens always in these shorter cycles. But I saw a lot of these like crypto mining machines. And personally, I stayed away from it because a lot of those projected returns are based off of what the heck the price of crypto is. With real estate, for example, normally you try to assume a rental increase of 2 to 3% per year just to account for inflation. Very reasonable. But if you're trying to drill for oil or have a crypto mining machine and you're assuming that crypto or the price of oil is going up 5, 10, 20% per year, obviously that's out of whack, right? That's not realistic. And a lot of the projected returns are just merely coming up from that escalator rate, artificially blowing up your numbers there. In 2020, when the COVID-19 hit, the demand for oil plummeted, leading many oil wells to shut down. So that could happen in this industry, including drilling a hole and not finding jack in there either. That said, I think a lot of people invest in this world because they can put in $100,000 and maybe get $80,000 of tax benefits coming back to them, whether they hit oil or not. I threw out some numbers in there, and those are just generalities. Obviously, you need to consult your own CPA, and this is not tax or legal advice. Obviously, all the deals are a little bit different here and how much your money goes to types of drilling where you're going to get your tax benefits. If you're in the 40-50% tax range and you're getting an $80,000 deduction, that might mean 40 grand to you right there that first year. Again, not a CPA here, so don't take your financial advice from me, but the way the tax code is made, this also helps out people who have high ordinary income. Normally we play in apartments because it's usually passive income and we can use the depreciation from real estate to offset our passive income there. But there's a lot of people who don't have a large real estate portfolio, or maybe you're a high income earner making $300,000, $400,000 plus per year. They have very limited things that they can do to offset their ordinary income. And that's where oil and gas comes in. But just to sum up my last point, these commodity prices such as Bitcoin, oil, these prices go up and down. So when you're looking at the model that's used to create these projections, maybe just take a look at what the projections are built off of. What is the assumption of the commodity prices throughout the whole? I talked a little bit about the taxes, and maybe it goes without saying, but oil and gas working interests are really suitable for high income earners with substantial disposable income, many of which you have to be an accredited investor. Accredited investors work with us. At one time, I was like, non-accredited guys, when I had little rental properties myself, how do you get access to these better deals? But when you're talking oil and gas deals, it's very volatile. This is an industry where you could drill a hole and find nothing there and lose all your money. So definitely not for the wary. And I think unless you're getting the full amount of tax benefits being a high income earner, over $380,000 for this year, I think, and if you're not over that threshold, I don't think it makes sense to be taking on this risk. Another thing to be on the lookout for, a lot of these tax reform acts came in 1986 to incentivize oil production in the United States, came around again in the Bush years, and now with Trump in office, he's used the term drill baby drill.
Drill, baby, drill.
He wants to get off foreign reliance of oil. You would think that would come with additional tax benefits, more than we have today. We haven't seen it quite yet. This is all speculation at this point. Nothing really is set in stone. Finally, I think that something to consider that's outside of all our control and the operator's control is the environmental and regulatory risks in the sector. For some reason, something could change and it could create a review for fossil fuel policies. This can mean regular drilling practices or the F word, fracking. You could have some change there. In 2020, some states placed moratoriums on drilling in more sensitive areas. The whole idea of global warming and whatnot. Either way, we do know when you light fossil fuels on fire, it kind of clashes with the whole decarbonization trend that most countries are trying to move more in that direction. It's going to get more and more expensive to do these types of things and more stringent environmental regulations and may shut down your projects. But with that, hopefully I've scared the crap out of you to at least pause a little bit. I do admit oil and gas deals oils are cool. It is neat when I get my little printout every quarter. You see the amount of oil being drilled and then you multiply it by the price of oil, and it's like real money that's being made. Everything that we have uses these polycarbons, like the plastics. I think there's a big environmental push to say that a lot of these things are very harmful for the environment. It maybe is, but this country really needs it. You can't run tanks on solar power. You have to have fuels there. Not only that, but it creates a lot of other things that we use every day. Correct me if I'm wrong, flame me in the comments section. But yeah, you can have a lot of Teslas, but where's that electricity coming from? A lot of times it's coming from natural gas or burning these polycarbons. Again, not to get political, I'm just saying if you're looking to invest in this type of stuff, great tax benefits, just weigh the costs and just be careful investing with the wrong cowboy out there. I'm very versed in the syndicator world, and I've seen a lot of these turn out to be just total shams with a lot of unscrupulous operators out there. In fact, I'm still trying to find a good operator to invest. I believe in the sector. I don't have too much exposure into it. Again, I like investing in businesses and real estate these days. I have always taken the attitude of I need to learn, so no better way of learning than to do it and put a little skin in the game. But if you guys have a good operator, by all means, let me know who you're working with. I like to try and do my due diligence. I think that's what's cool about our community. If you guys are interested in joining us, you can get my free masterclass by going to thewealthelevator.com/master. It's about 12, 13 hours of content there to get more involved into the alternative investing world, more information about alternative finances, such as infinite banking, some of these tax strategies that we went into today. I'd like to meet you and get to know you guys a little bit better, especially if you're accredited investors. And we'll see you guys on the next video. Bye.